Dealing with the shock of property damage is, well, it's terrifying. I mean, whether it's the slow drip of a burst pipe that suddenly turns into a huge mold problem or, the sudden violence of a severe storm,
It just throws your world into complete chaos.
complete chaos. And just when you think you've got a handle on the situation, you hit the next wall. The insurance claim process. That process is often confusing, frustrating, and critically can result in a payout that it just doesn't cover the cost of getting back to normal.
Not even close, a lot of the time.
Okay, let's unpack this. Our deep dive today is built around source material from a firm that deals with this exact problem. We're looking at a third-party resource, the public adjuster, or PA,
Right.
and we have some pretty specific metrics and case studies, mainly from Florida, which is, constantly battling severe weather, that show this staggering financial gap between what an insurer might first offer and what professional representation can actually get for you.
And that's really the mission for us today, isn't it?
Yeah.
To understand not just if this kind of advocacy works, but how it works, and maybe why that huge financial gap even exists in the first place.
Exact.
This is such a critical discussion for anyone who owns property, really, regardless of where you live. We're looking at that fundamental friction point in property claims. On one side, you have the insurance company's adjuster, whose job at the end of the day is to protect the financial interests of their company,
Right, the carrier.
a carrier. And on the other side, you have the policyholder, who is often dealing with emotional trauma and has, frankly, zero expertise in dense policy language.
Of course.
So the material we have today really highlights what happens when a licensed professional steps in and works exclusively for the policyholder. They can turn claims that were basically deemed worthless into these significant recoveries.
Okay, so let's start with that crucial distinction. We all sort of know what the staff adjuster is. They work for the insurance company. So who exactly is the public adjuster? What's the difference in their motivation?
The difference is it's agency. The public adjuster works for you, for the homeowner, for the business owner. Their entire specialization is maximizing the settlement for residential and commercial property damage claims.
So they're your advocate.
They're your advocate. When the source material we looked at talks about leading clients from chaos to compensation, that's their core value proposition. They remove the stress, and they apply expert knowledge of the policy. They take over all the paperwork, the technical jargon, the engineering reports, the endless negotiations.
It honestly sounds like a lifeline. But what makes their intervention so necessary? I mean, is the insurance company always actively trying to lowball the claim, or is it something more subtle than that?
I'd say it's often more subtle, but the result is the same: undervaluation.
Yeah.
Their value really rests on these three pillars that address the client's biggest pain points. The first one is just peace of mind,
Sure.
handling the whole process. The second is an efficient claims process, speeding up recovery because they know all the regulations. But the real driver, the main thing, is maximize settlements.
And that comes from finding things the first adjuster missed.
Exactly. Finding things they missed or maybe intentionally excluded. Think about hidden water damage behind a wall, or necessary code upgrades the city requires, or even future costs.
Okay, this leads right to the central issue then. If claims are being systematically undervalued, where is the average person getting tripped up? And, this sounds a bit like a magic bullet. Doesn't this professional help come with a pretty hefty fee?
That's the critical question, right?
Yeah, how do you justify losing, 15 or 20% of your recovery to the PA?
So that's the key piece of skepticism we need to look at. PAs work on a contingency fee. That means they only get paid if you get paid.
Ah, okay.
And their fee is a percentage of the recovered amount. If you get zero, they get zero. The source material really implies that people justify the fee because they go from a tiny settlement, or even a $0 settlement, to a substantial one. I mean, if you're recovering $100,000, sure, 15% is a lot, but it's 15% of money you're never going to see anyway.
That completely reframes the cost. It's not a cost, it's a transaction for expertise that unlocks money you were owed.
So let's dig into the technical side of this undervaluation. What are the specific tactics or policy details that are so often overlooked?
What's fascinating here is that the undervaluation often comes down to two major technical areas the average person would just completely miss. The first one is the failure to account for necessary code upgrades.
Code upgrades.
Yeah. Florida, for example, has incredibly strict building codes, especially after all the hurricanes. If your roof was damaged, you often can't just patch it. You have to replace the whole thing to meet the current code.
And that's a huge cost difference.
Huge. Tens of thousands of dollars. An insurance adjuster might overlook that requirement, but a PA absolutely will not.
Okay, and what's the second area?
The second is the fundamental difference between how an insurer might calculate damages at first versus how the policy should actually pay out. We're talking about actual cash value, or ACV. versus replacement cost value, RCV.
Okay, break that down. So ACV is what the item is worth today with depreciation. RCV is the cost to replace it with a new, similar item. Initial offers often lean really heavily on ACV, which is always much lower. The PA is there to make sure the full RCV is paid, which allows you to actually afford to rebuild, not just, patch things up.
So it's not just about being a tough negotiator, it's about detailed technical policy interpretation. And it's leveraged by people who are constantly certified and up to date on those regulations.
Precisely.
Before we get into the really juicy case studies, let's just ground this with the firm's overall numbers. This isn't happening on a small scale.
Not at all. The source material shows some really impressive metrics. Over 1,000 claims adjusted.
1,000.
And that volume translates into real money. Over $50 million received for their clients. And the fact they've worked with over 50 different insurance companies shows they aren't, intimidated by any single carrier. They bring a ton of institutional knowledge to every single negotiation.
The metrics are solid, but the real fireworks, for me, happen when you look at an individual person's situation. Let's get into the dramatic examples from the case studies because they really illustrate this transformation from like a zero-sum game to a massive recovery.
Okay, so let's start with the phrase that is basically the villain of this story, under-deductible.
Right.
This is the insurance company saying the total damage is less than the deductible you owe, which means they cut you a check for $0 and you pay for 100% of the repairs yourself. This is where most people just give up.
That's the crucial definition. When they say under-deductible, they are handing you a bill for the entire loss and just walking away.
They're done.
So let's look at this case in Punta Gorda, Florida. The claim was for tropical storm damage. The initial finding from the insurance company, under-deductible.
Meaning that homeowner was getting ready to pay for everything out of their own pocket. But then the PA stepped in. And the outcome?
The PA settlement was $115,000. And it specifically included a brand new roof and all the associated costs. That represents a financial shift of plus 115,000% from the original finding.
That is just staggering. It's not just a higher number. It means the PA found major structural damage or code violations that the first adjuster completely missed. They turned a rejected claim into a full recovery for a major part of the house.
The homeowner went from owing money to receiving six figures.
A total reversal.
And we see that same massive transformation again in Key Biscayne. This was a multifamily property, a broken drain line, a lot of water damage. And again, the insurer's original offer, under-deductible.
And that's the final negotiated amount.
A PA settlement of $225,000.
Whoa.
That's an increase of plus 225,000%. It just suggests that what seems like a simple plumbing issue can hide a $250,000 insurance fight if you know where to look for mold, hidden damage, and all the repair work.
Exactly. Now let's look at Pompano Beach. This was a fire and smoke damage claim from a kitchen fire. In this case, the insurer did make an offer, $40,900. So not zero, but that number implies a pretty minimal repair job.
Right, a patch job. And after the public adjuster got involved,
the final settlement jumped to $185,000.
Wow.
That's a 350% increase. Now, while the percentage isn't as wild as the under-deductible cases, this 350% jump is. It's arguably more relatable for most people. It shows that even when an insurer accepts liability, their initial valuation can be dramatically short of what you actually need.
It just underscores that the first offer is rarely the final offer, or the correct one.
Exactly. These results prove that a claim's true value isn't just a given. It has to be negotiated and proven through detailed expert documentation.
Okay, let's pivot a bit to specialization. This is highly relevant given the firm's location in Florida. They specialize in a huge range of claims, really, that are necessitated by that environment.
Yeah, the need for expertise just goes way up when you're in a high-risk place like Florida. The firm handles everything from the obvious stuff storm damage, hurricane damage, tornado damage, to the more common day-to-day claims like water damage from a burst pipe, or fire damage, roof leaks, mold, even vandalism and collapse.
They also make a specific note about flood damage. Why is that distinction so important for you, the listener, to understand?
Because it's a huge point of confusion. The source material makes it clear that flood insurance is separate from your standard homeowner's policy. It's usually covered by the National Flood Insurance Program.
The federal program.
Right. But, and this is crucial, PAs still help navigate those claims because the documentation and negotiation skills that you need for a flood claim are just as complex, and you're often dealing with a government entity instead of a private insurer.
And it's not just for homes. If you're a business owner, a damage claim can mean the end of your company if the delay or the cost is too high. What's the specialization for commercial claims?
This is where the service goes way beyond just fixing the building. I mean, they handle the structure and contents, of course, but they also specialize in business interruption claims.
Which would compensate the business for, what, lost sales?
Lost revenue due to being closed or having to limit your operations.
That sounds incredibly complicated to calculate. How do you prove what the business would have earned if the storm hadn't happened?
That's where the deep expertise comes in. It's really complex, almost like forensic accounting. They analyze historical sales data, seasonal trends like, did this happen right before your busiest season, and projected revenues.
So they're building a case.
A very detailed case. Without that kind of advocacy, businesses often just accept a quick, low estimate that doesn't really cover their fixed costs, let alone their lost profit.
They also mention assisting with cyber claims, which, I mean, that seems like a huge leap from storm damage.
It does, but it really speaks to their role as navigators of complex claims. While a lot of standard property policies don't cover cyber breaches, a PA can examine the policy for any kind of related coverage or just help the client navigate the incredibly complex documentation required for any cyber insurance claim. They explore every possible avenue for you.
And finally, let's touch on their local specialization. Their corporate office is in Plantation, Florida, and they focus on counties like Miami-Dade, Broward, Palm Beach. Why does being local matter so much in this field?
Local insight is a massive tactical advantage. Florida is a regulatory labyrinth, and it's constantly changing its building codes and insurance laws because of the catastrophic risk.
It has to.
It has to. An adjuster who works in those specific South Florida counties understands the unique political, regulatory, and even the contractor environment. This local knowledge helps them streamline everything, correctly reference specific city building codes, and anticipate the exact arguments the insurance carrier is going to make. It just ensures the claim is handled correctly right from day one.
So if we connect this to the bigger picture, achieving these huge settlement increases requires not just sharp legal and technical knowledge, but a really disciplined, methodical approach while your client is in a moment of total crisis. How does this client-centered approach they describe facilitate that trust?
It's the whole framework for managing expectations and stress. They focus on 3 key areas. First, clear communication. They make sure you're updated constantly, you're never in the dark.
You're not in that black hole of information.
Exactly. Second is transparency. And that doesn't just mean forwarding you a bunch of legal documents. It means explaining the complexities in plain language, keeping you informed of all the negotiations, why they countered an offer, what the next move is.
That seems critical. Policyholders often feel so powerless. What's the final piece?
It's the collaborative approach. They actually work with you to understand your specific recovery goals. Maybe speed is your priority, or maybe maximizing every single dollar for high-end materials is more important. They tailor the strategy. They act as a real partner, not just some vendor you hired.
And that approach clearly works. We saw client feedback describing them as being terrific during an extremely stressful period, and others, noting the results, got us more money than we anticipated, and that the whole process was thorough, efficient, and totally professional.
It sounds like they really deliver on that promise of peace of mind while also securing the maximum recovery. In a high-stakes situation where time is money and the stress is just debilitating, having that expertise and that clear process, well, it's arguably worth the percentage fee, just based on the data.
So what does this all mean for you? The most significant takeaway from this deep dive is that when you face a major property damage claim, that initial valuation from the insurer, especially if it's low or it's a flat-out rejection, it is not the final verdict.
It's just the opening offer.
Exactly. The data, particularly from those Key Biscayne and Punta Gorda cases, it just illustrates that your choice of representation is crucial. It can unlock the true maximum value of your insurance policy. It's the difference between accepting the insurer's interpretation and employing a professional advocate for your own interests.
Absolutely. The success stories really reinforce that finding. Claims that are initially rejected or found to be under-deductible can be significantly recovered through expert negotiation. They leverage things like code upgrades or RCV that were originally just overlooked. And this raises a really important question for you, the listener, whether you live in a hurricane zone or not.
Which is?
If a company's default position is often undervaluation, how much financial risk are you just absorbing by trying to navigate that whole complex system by yourself?
The lesson here is pretty profound. That dreadful claim rejection, that under-deductible letter, is fundamentally a challenge to you, the policyholder.
And professional advocacy flips that dynamic entirely. The fact that a public adjuster can take an initial $0 decision and turn it into a $115,000 or $225,000 settlement, it proves that the burden of proof and accurate valuation often falls squarely on you. So think about how often people just give up. They settle out of pure frustration or lack of expertise, assuming under-deductible is the end of the line. Understanding that this concept, this rejection, is actually recoverable. Well, that's the key insight this deep dive really offers.